Module Overview. This module delves into the core principles, structures, ethical obligations, and regulatory standards that govern the preparation and presentation of valuation reports. It emphasizes the critical role of professional standards, transparency, accountability, and ethical judgment in ensuring the reliability and acceptability of property valuation outputs. One purpose and importance of valuation reports. A valuation report is a formal document that presents the valuer's opinion of value, the basis for that opinion, and all supporting information. Key functions: facilitates informed decision-making by clients, documents the valuer's professional judgment, serves as legal evidence, ensures accountability, assures users of quality and independence. 2. Structure and components of a valuation report. A complete valuation report must include the following sections: title and reference number, executive summary, client identification and purpose of valuation property, identification and description legal interests valued, e.g. freehold, leasehold, basis of valuation, market value, fair value, etc., date of valuation and date of inspection, assumptions and limiting conditions, methodology used, analysis of market data and rationale, valuation conclusion, value estimate, declaration, signature, and valuer's details, appendices, photos, maps, survey, etc. Note: valuation reports vary depending on purpose and regulatory requirement, e.g., mortgage reports versus tax reports. 3rd, International Valuation Standards, IVS. Published by the International Valuation Standards Council, IVS provides globally accepted guidelines for carrying out valuations. Core principles of IVS: consistency and comparability, transparency of assumptions, professional competence, clear disclosure of scope and limitations. Key elements: IVS 101, scope of work; IVS 102, investigations and compliance; IVS 103, reporting; IVS 104, basis of value; IVS 105, valuation approaches and methods. 4. RICS Red Book Standards, UK and Commonwealth countries. The Royal Institution of Chartered Surveyors, RICS, publishes the Red Book, a guidance manual that enforces IVS standards and adds further requirements. Mandatory for RICS members, Red Book ensures professional objectivity, justification of assumptions, regular revaluation for investment properties, independence and avoidance of advocacy roles. 5. Nigerian Valuation Standards, NVS, and NIESV guidelines. In Nigeria, valuation is regulated by Nigerian Institution of Estate Surveyors and Valuers, NIESV, Estate Surveyors and Valuers Registration Board of Nigeria, ESVARBON. Key elements: valuers must be registered and licensed. Use of appropriate valuation bases: market value, investment value, clear and honest representation of facts, documentation of evidence and client communication. 6. Ethical responsibilities of a valuer. Valuers are bound by codes of professional conduct to maintain integrity, truthfulness, and objectivity; independence, avoiding conflict of interest; confidentiality, protecting client data; competence, only working within areas of expertise; transparency, disclosing assumptions and risks. Common ethical dilemmas include pressure from client to inflate or deflate value, undisclosed dual agency, representing buyer and seller, use of unreliable data, accepting assignments outside one's competence. Failure to comply with ethical standards can result in revocation of professional license, civil liability, criminal prosecution, damage to professional reputation. 7. Reporting biases and conflicts of interest. You must take precautions to eliminate bias and declare conflicts of interest. Examples of bias: confirmation bias, favoring data that supports prior assumptions; anchoring, fixation on a target figure; advocacy, becoming a client's agent rather than an independent expert; conflict of interest scenarios, personal or financial connection with property owner; contingency fees based on property value. Valuing a property recently bought or sold by the valuer, you should provide a statement of independence in every report. 8. Reporting for special assignments. Valuation reports may vary based on Purpose, e.g., financial reporting versus litigation. Jurisdictional regulations, client needs and instructions. Special assumptions, e.g., vacant possession, as is, or as if developed. You must clearly define scope of work before beginning and document all inputs, methods, and adjustments. And ninth, review, audits, and quality assurance. Valuation reports are often subjected to internal peer reviews, external audits, especially for financial reporting, cross-checks by regulators, courts, or banks. Quality assurance measures include checklists, reconciliation of valuation methods, documentation of data sources, client feedback mechanisms. Key takeaways. Valuation reporting is as important as valuation calculation. Reports must comply with national and international standards. Ethical behavior and professional conduct form the backbone of credible valuation practice. Transparency, independence, and clarity are non-negotiable. Poor reporting can nullify even technically sound valuations.